Welcome everybody to our Stay Engaged session for whatever day this is, whatever time this is. Actually, it's June 5th, 10:30, and just so happy to have everybody. It's going to be an amazing session, super interactive as well. This whole series is about staying engaged in startups at a time where I believe, and we believe as an organization, startups are going to be even more critical than they have been for economic recovery, coming out of the smackdown that has been the coronavirus. But frankly, even before that, it was critical that we have an increased level of startup activity for our state and our country. And so I'm excited to be engaged and stay engaged with you all. Today, we have Kickstart Seed Fund with us. Kickstart Seed Fund, I'll let them describe themselves, but just roll out a little bit of the carpet here, is based out in Utah. And for the past 3 years, I've been able to interact with them through our pitch events, through deal flow sharing. As a larger fund out of state, it's still critical in New Mexico for New Mexico entrepreneurs going big and growing quickly to have funding and investor relationships out of the state with the amount of capital we have here. And Kickstart has been one of those funds that has been super engaged with New Mexico. Sydney Keddington, whom you'll meet in a moment. I first met, I think, Sydney back at Balloon Pitch.
That's right.
Last fall.
And yeah.
Kurt was I think a founding participant, if I'm not mistaken, in Ski Lift Pitch. I can't wear both shirts at the same time, but
you can. Good, but you look like a dork.
I'm used to that anyway, so that's fine. Just really happy to have both of you. I know you have some New Mexico experience, but you're really bringing to this group largely New Mexican and largely entrepreneurial, but some folks in broader economic development, as well as some folks from perhaps out of state just interested in Kickstart. Welcome to you all. We're going to start with a fireside chat. I have some questions that have been on my mind. I'm excited to ask these two, as I'm sure you're excited to learn more about Kickstart. Then we do about a 15-minute breakout room session, which is kind of magical if you haven't experienced it yet. It's a meeting within the meeting. You'll be placed with 3 others and have a 15-minute discussion, kind of flowing from the fireside, or actually the flag side chat session here. And then we'll come back and you'll have your chance then to do some Q&A through the chat box. So what I encourage is, as I get into my first question here, is if you brought a question for Kickstart to the meeting, type it out in a notepad or something, have it at the ready. But if you could wait to ask until the back half of the meeting, that would be great. And while we're talking, if a question comes up, hold on to it, iterate it, refine it. Maybe your breakout room discussion will illuminate more, and you can bring that back, and I'll be the facilitator of that Q&A. All right, let us get started. So, Kurt, Sydney, welcome. Either or both of you, provide a little bit of the basics. What is Kickstart Seed Fund, the investment thesis, and kind of cover, especially since this is a $110 million fund recently closed, how you're thinking about that thesis in the time of COVID right now. So hand it off to you for maybe several minutes.
Cool. You want me to start this off, Kurt?
Yeah, go for it, Sid.
Okay, so chime in wherever. But yeah, so first of all, thank you so much for having us. We're thrilled to be here. We love ABQID. We love New Mexico. And so it's really an honor to be a part of the webinar today. And we're looking forward to breakout sessions as well. So like TJ said, we recently closed a $110 million fund. We view ourselves as very fortunate to have been able to accomplish that very shortly before all of this really started breaking out. And so we're in a pretty fortunately good position to be deploying this capital over the next several months and years here. And I think TJ kind of hit on this, but we really do believe that that startups are more important now more than ever. And really great companies tend to emerge from times of crisis. I think that there's a lot to be said for entrepreneurs who are willing to really step up to the plate and commit in an environment like this. And so there's sort of some honestly kind of makes our jobs easier as investors to some extent, because there's some self-selecting that's done during a time like this. And so we're really excited to support the companies that are coming up with innovative ideas right now. And I think, there are some societal and behavioral changes taking place right now, many that will be sticky, and I think that presents opportunity for technology and innovation. I think that in many ways, coronavirus and kind of what we're seeing in this environment has sort of activated and stimulated innovative capacity at the regional and community level, as opposed to eliminated. And, we've seen technology companies responding so quickly to our kind of new remote environment. We have so much technology that enables us to respond and really kind of shift to a distributed workforce. And so we're excited. We're, I think, optimistic. Obviously, I think we're cognizant that this is a really challenging time for a lot of people, and we don't discount that. The economy is really suffering, and that's something we're really cognizant of. This is a real crisis, and I think that we're looking forward to really stepping in and being able to help where we can in this environment. And so, I guess a couple more quick points just for context on Kickstart. We started back in 2008. We are a seed stage group based in Salt Lake City, Utah. We have 100 companies in the portfolio, and we're currently investing out of our fifth fund, which is a $110 million fund. And that brings us just over 250 under management across all 5 funds. And we're focused on businesses based in Utah and surrounding states, so really the Mountain West, as well as a couple in California. And I'd say we sort of have an affinity for B2B SaaS businesses, but we really sort of take a generalist approach as well in terms of industry. Anything you would add, Kurt?
No, I think that's a great overview. Thanks, Sid.
Actually, so thank you, Sid, and you don't mind me calling you Sid because Kurt's doing it, so I can do it, right? Is that cool?
Yeah, Sid's great.
I keep thinking about Ice Age because my kids love that series, but I won't go there.
I love being compared to a sloth, by the way, so thank you for saying that.
Patient capital, right?
Right.
So Kurt, over to you, because Sid, you're newer to the fund and the management structure. But Kurt, you've got some organizational memory, some of those early investments. Can you share a little bit about, for educational and enlightenment purposes as well, how do you go from Fund 1 to now Fund 5? And what were the lessons learned along the way that go into how you're investing now in Fund 5 versus those previous funds?
Yeah, there are a few, I think, that I could highlight, and there are a bunch that I could speak about, but I'll try to be a little bit selective on maybe 3 or 4 that we think are most salient. One is that when we're funding a company, we absolutely need to make sure that the amount of funding in total that the company is taking in whatever round we are participating in gets the company to a meaningful interim destination, whether that's a set of milestones that are critical before a strong story for a next round could take place, whether that's some minimum level of revenue, whatever that is. We learned, I think, especially as we made the transition from Fund 1 to Fund 2, that it does no good to get a company part of the way there. And unfortunately, our fund size in Fund 1 was so small that we ended up doing exactly that in many cases, where the amount of money the company would take would get them part of the way to a cool place, but part of the way to a cool place doesn't help them raise the next round. And so they're kind of stranded, and so that's one lesson I think that we really take into account now in designing the rounds we participate in.
Sorry to interrupt, but is that lesson embodied in check size as well? I mean,
check size is a piece of it. Yeah, check size is a piece of it. But there's interplay, I think, between the size of the round as well as what is a reasonable thing to, for that company to accomplish. It's very easy, conversely, to overfund a company. And we have seen overfunding have as detrimental effects on a company and its success as underfunding. There's something that's very, very valuable about a true mentality of scarcity on the part of founders. It motivates tough decision making, and tough decision making usually means that the team stays focused on the absolute essentials, and things that could otherwise be distractions or nice to haves don't get focused on because they can't afford to, right? So you're always kind of trying to walk a really fine line as you design these round sizes. But so that's one important lesson. I would say a second important lesson is the idea that we call founder opportunity fit. There are reasons why certain founders will have an unfair advantage to go after the opportunity that they're actually pursuing. And those reasons can come in a number of forms. It can come from prior experience. It can come from personal passion. It can come from having served a particular customer before, and this new opportunity might serve the same customer. There are a whole bunch of reasons why this can come up. But one of the things we've learned, I think, from our best investment so far is that in almost every case, there was something about that founder that gave them an unfair advantage in pursuing that opportunity. And so many of the odds are stacked against you to begin with, right? This is a slog, and the failure rate is very high. And so one of the ways to stack the odds in your favor is to choose the founder you think's got a better shot at making it work than anybody else. So that's...
Can you share a quick example of that, maybe from the portfolio?
Yeah, I can. I'll give you one that just comes top of mind, in part because we're starting a podcast, and I just recorded a podcast with this particular founder. So the company is Sondermind out of Denver. The founder is a guy named Mark Frank. Sondermind is a marketplace company for organizing and delivering behavioral health therapy. And Mark had prior management experience. He had 2 prior successful startups. So you're seeing some factors that are looking generally good. Here's the factor that caused us, I think, to feel that there was a real X factor in Mark's favor. Mark has family members who are therapists, and he had personally watched and experienced the difficulty they had building their private practices. And then secondly, and Mark's very vulnerable in talking about this, so I'm not uncomfortable saying it in this session, he and his wife sought therapy at one point, and the process of navigating that system, trying to use his insurance benefit, contacting a therapist that actually had an open practice and would take new patients, making sure the therapist actually had expertise in the area that they were seeking support, was incredibly difficult. And so you took prior healthcare experience, 2 prior successful startups, and an enormous amount of passion about solving a problem that he had personally experienced and just was convinced needed to be fixed. That's a nice set of factors that says, hey, this is a person who can pull this off, right? Might be in a unique position to pull this off.
That's huge. And when we were talking before, you said, Dan and I, we were talking about how you're, as a generalist fund, you said there's a sweet spot there with business to business software as a service companies. Yeah. But you're open on the fringes there. It's interesting how you talked about one of the lessons learned, and one of the really core theses is founder opportunity fit. Yeah. Because it's that analog to what we talk about in product market fit. At the early stages, the seed stage, the nice analogy is you don't have that, you don't have product market fit, but if you have a founder and opportunity fit, that becomes a proxy for future ability to find product market fit.
That's exactly
right. Also, it's interesting you shared a healthcare example, because I'm thinking about one company in our portfolio, therapist of 25 years, was looking for solutions and didn't find one to the problem that she herself was experiencing all those years. Yeah. So healthcare, education, I was just talking to one of our Activate New Mexico company founders yesterday. Yes, that is especially a slog in those harder to reach industries. Yeah. But it accentuates the importance, doesn't it, of founder opportunity fit as well?
Yeah, it does. To your point, oftentimes post-funding, at the stage at which we invest, there is still some portion of the product market fit journey that has yet to be completed. And so we're not always counting on the fact that the company has figured that out quite yet at the time we fund, especially if we do a pre-seed investment. Usually that's far from the case that that's completed. But so other factors have to play into the decision making that help you feel like that company will successfully navigate the product market fit journey. Yeah.
One other kind of disambiguation question, Kurt and Sid, is what check sizes are we talking about, and what round sizes are we talking about? When you say pre-seed and seed, on the whole or by averages, what's the check that Kickstart might ride for those two cases? What's the total round size typically?
Yeah, you want to take that, Sid?
Sure. So average check size, broadly speaking, $1.25 million, I would say. In this environment, and so at the beginning of a new fund, we like to also invest at the pre-seed level. And I think in this environment in particular, and kind of given closing this new fund, we want to sort of index for earlier opportunities. And so I think at the beginning of a new fund, it makes sense for us to do just that, and then be able to follow on with additional capital to these earlier companies that are hitting key milestones and looking like they can kind of graduate, so to speak, to the seed level where we can follow on with additional. So those check sizes are, I'd say, 100 to 600K, give or take, probably 300K on average. And then as far as round size is concerned, I mean, Kurt, feel free to jump in. I feel like it sort of varies, but probably, you know, at that core level, 2 million or less, under 2 million. And then at the pre-seed level, we're talking under $1 million.
Yeah, we're certainly seeing average seed round sizes sneak up slightly. And I don't think that's price inflation going on. I think one thing that is a general trend in the market is, you know, people are getting more and more experienced at this, that the overall market expertise about how to start a company is going up. Mentorship opportunities are there and plentiful. And in many cases, these companies can make more progress before they take a seed round, which might mean the seed round is a $3 million round or a $3.5 million round.
Yep.
The last piece of the strategy that Sid didn't mention, which is not as relevant to this group that are seeking first-time funding, either pre-seed or seed level funding, is we also reserve a lot of the fund to follow our best investments. And, you know, we've done investments, for example, out of Fund 5. In one of our most successful companies from Fund 4, our follow-on check was $4 million, just the Kickstart check, right? In a very, very big round that was led by a nationally leading fund. So the follow-on money is very meaningful as well, but in terms of first-time deals, what Sid described as pre-seed and seed, that's kind of the sweet spot and what we'd be, you know, talking to most of you about if we were looking at your companies.
One more kind of, I think, great education opportunity here for those founders in the call who might not be as cognizant or aware of VC funds, their structure, how they make money, et cetera. You talked about reserving. How much of this $110 million fund will be completely new investments as of, you know, June 6th or later, versus how much is reserved for those? And thus, as a founder of a startup, what does my competition look like? You know, if you invest in me, once I make really great traction in the marketplace, I'm going to be one of X number of startups you probably do that with.
Yeah, do you want to know the answer to that in terms of dollars or volume?
Maybe volume first.
Investments. So volume of investments, I think over the course of the fund, we anticipate doing about 20 pre-seed deals and about 21 to 22 seed deals. First-time investments. And it will be possible, by the way, that some of those seed deals will be seed rounds in previously funded pre-seed companies in the same fund, right? One of the reasons, as Sydney described, one of the reasons why we want to do a lot of pre-seed deals early in the lifetime of the fund is because those companies have time to mature. And then if they qualify for a seed round, we're there to be able to do the seed round out of the same fund so that our investors that took the risk on that company have the chance to benefit also from the next round.
Great. All right. Totally different track here. And thanks for that. For those finance-minded people, that was glorious. And some eyes are glazing over for some other people. This is unprecedented times with coronavirus, with widespread and really important discussion going around and civil unrest, protests around this broader, a huge topic of diversity, equity in our country. I want to form the question this way. Venture capital has had this discussion ongoing for several years now. We've seen many different actions taking place. For example, many VC funds, especially out of San Francisco, where people naturally look to see what's the leading behavior almost sometimes. They have pledged to have more diverse partnerships, management teams making investments, which the thesis goes will lead to more inclusive deal flow and diverse deal flow. Others, more recently, A16Z, Andreessen Horowitz has set aside a $2.2 million fund specifically for Black, brown founders. And especially in the past 2 to 3 years, funds purpose-built from the ground up, from inception, like Backstage Capital, where Arlen Hamilton is the managing partner, one of the managing partners, from the get-go. They say this fund is for Black and brown founders.
Right.
So it's this ongoing discussion. I think it's accentuated. I personally have been just more uncertain of how to think and what to say than ever. But I'm reading, I'm engaging in my mind and my team. So I know it's a kind of a loaded question, but I did want to ask it. Nevertheless, is how is a fund like Kickstart? What conversations is a fund like Kickstart having as you're actively investing? You're going to be seeking 20 new deals over the next couple, 3 years.
Yeah.
What's the conversation and action plan like at Kickstart right now around this topic?
Do you want me to take a crack at that first, Sydney?
You can go for it and I'll chime in.
Okay. So I'll address that from 2 dimensions because TJ, you asked both about team and about investments. So on the team side, I would say the composition of the team today in terms of diversity is materially different than it was when I started with the team 5 years ago. And that's progress. I think we're definitely not going to see that as being, sufficient, but it does represent progress. We have, another, without getting too specific here, we have another hire in the works right now for a senior member of our team that would add to that diversity. So that's positive. From the standpoint of the funding of companies and how this problem gets addressed on the level of funding, I think the very first place to start is in deal flow. It is so easy in our business. When you've been in the investing world as long as we have, the vast majority of the investments that we see come through inbound referrals. And so people we know, they're either entrepreneurs we funded previously or investors in our fund or other funds with which we've worked, are the primary source of the new companies that we see. And it's easy, I'll tell you, it is easy to get lazy on that basis. We could build a great fund just on the basis of taking those phone calls. Here's the problem. The people that send us referrals are people that tend to look like us, right? That's just the networks that we've historically been closest to. So what it takes really, if you're going to change what you're seeing for the first time coming in your door and giving those entrepreneurs a crack to have their day in the sun and get a pitch, is you have to do a more proactive effort of going out and sourcing. And two members of our team in particular, Sydney and Brandon, as we've made the transition into Fund 5, we're investing significantly more in terms of their time as a percentage of the time that they would otherwise spend on other fund activities in proactive, outside of the office, out at events, meeting with people, deal sourcing activities. The more inbound activity we get, the easier it is to address this problem. If we never see these entrepreneurs, then they're obviously not going to get funded by us. And so it's most important, I think, that we fill the top of the funnel with diverse entrepreneurs, because at least our track record has been, because we ran some numbers on this, our track record has been that we over-index in non-traditional founders when we see them, right? We've actually had a great track record funding founders from diverse backgrounds when they're coming through the pipeline. We just have to build the pipeline more intensively.
Yeah. Sid, anything to add to that? Is fantastic thinking. Thank you, Kurt.
Yeah, and that's really well said. I don't have a lot to add. I think just to echo Kurt, I think really, where we think we can make the biggest influence right now is in the area of recruiting and talent, and particularly in deal flow, and they really tie together in a lot of ways, I think. And I think just really encouraging and kind of getting out there, again, filling the top of the funnel, people of color, women, and other minority groups to just come in and pitch, and just to get those opportunities kind of visible for us at the top of the funnel. And I think, I would mention at a local level, there are also funds that do have specific or exclusive focuses on diverse entrepreneurs. There's a group called Beta Boom locally, led by Kimmy Pauls, and she's phenomenal group. There's also a group locally called Artemis Fund that's based in Texas, but recently opened an office here by Leslie Goldman, focused exclusively on women led companies. And so these are phenomenal investors that we're proud to work with and love to support. And then I think, just again, the biggest thing I would say is we want to see more diversity. And I think, we can't change our entire industry, at least not instantly, but we can push for change within ourselves and encourage change within our sphere of influence to collectively push to a point where things are really changing. And I think a lot of big things are happening. It feels like real change takes place at the individual level, and that's really critical for all of us to be keeping in mind. And I think one more quick thing I'd mention too is specifically within Kickstart, and one thing to kind of highlight is we've got a student-led fund called Campus Founders Fund. It's students investing in students. It's actually the way that I got to know the Kickstart team. During college, I was a part of this fund for a couple of years, and historically, we've just by way of kind of geographic proximity been particularly focused on students within the state of Utah. And a really big initiative we have for K-5 is branching out geographically. And we're really excited specifically to work with New Mexico on recruiting talent to support the student fund. And so I would just say for anybody on the call who is or knows of talented students who would be interested in something like this, I won't speak in great detail kind of what the new initiative looks like, but I would just encourage anybody to reach out, and I would be happy to share more because that's something that we're really excited for in the coming months. And would love to, of course, to this point, really see more diverse talent coming to the table as well.
Fantastic.
Yeah.
Yes, C&M, of which C&M Ingenuity is a part, is number one for Hispanic graduates, and I think number one or number two for Native American graduates, which is something I'm really proud to be a part of. I don't want to get into ABQID Fund. This is about Kickstart, but those conversations are so important. I think they're important at all levels. They're important at the level of the financial return you're capable of returning to investors based on the fact that markets are getting more diverse, and market segments that are unreached are typically diverse.
Yep.
Back to the founder opportunity fit. So there's so many good reasons to be engaged in this discussion, and happy to hear, especially Sid and Brandon, who we both know, both been in New Mexico, are connected to that specifically. And we hope to, obviously, this call is emblematic of it, continue to be a partner in that push. So I have one more flag side chat question before we get into breakout rooms. And it's trying to be encouraging towards discussion thereof. Given you're a generalist fund, B2B SaaS, you, like me, have been reading McKinsey and this and that in terms of what are the trends, what are the data showing in terms of back to work and the changes in travel industry and healthcare. Maybe for both of you, name one area you have glommed onto a little bit more that you think is ripe for opportunity for the right founder over the coming 6 months. Like, hey, if you're a founder on this call, I would really take a look at X in terms of forming a company to solve this type of problem, because I really think this is going to be a big deal. Kurt, what would you say to that?
To your point, we are not thematic investors, right? We've never been ones to necessarily go out and say, when drones were an emerging tech, that we've got to find 6 drone deals, or it hasn't generally been an approach of ours. We'll take a great company from anywhere in any great opportunity space. I would say one trend we have seen in the portfolio, which I think there's a reason to believe could be accelerated by the kinds of conditions we're seeing today, are marketplace companies. So some of our very best performing companies in the Kickstart portfolio are marketplace companies, where you're taking a disorganized supply and a disorganized demand, and you're bringing, those two things together in a way that you can create an efficient market for transactions to occur. The classic examples of these that people love to cite are things like Uber, right? But, I think in a world where the conditions of work, to some degree will be different going forward. I'm not one of those that's prognosticating that, we're all going to be permanently remote, or even to a great degree remote, right? I think there's something about direct human interaction that does not have any easy substitute. And we will figure out how to do this. Although I do think, remote work certainly coming out of the back of this will be more acceptable and more mainstream than it has been. That said, I would just say there are still so many opportunities out there to take slack in the supply of some good or service and unmet demand that needs that good or service, and to match those things together in marketplace models. We really like them. They can be expensive to build. They're hard companies to build. But when you find good ones, they're massive markets, and they're really fun to go after.
That's fantastic. What are you thinking about, Sid?
Yeah, marketplaces popped into my head too, so I won't add to that. I mean, I think an obvious one is healthcare. There's just a ton going on in healthcare, and I think we're seeing some really exciting innovation at that level. I think, like, very broadly, what I would say, and this isn't industry specific, but I just think to the point of kind of founder opportunity fit, I think one thing that can be sort of underappreciated is what that really means. And I think in my mind, at least, when a founder is hyper focused on solving a problem, the problem is more likely to be solved. And I think the contrast is, as opposed to being hyper focused on rolling out a solution. And so I think that when problem solving is the focus, not if, but when pivots need to take place by way of external factors or where the company is headed, all these different kind of elements that can be factored in, I think that that's where success really tends to arise. And so I think that's just one thing we love to see is, are you passionate about solving this problem? And are you going to do whatever it takes and pivot in whatever ways you need to really kind of see this through? So that's not industry specific. That's just kind of a thought on, I think, fundamentally what we love to see in kind of a founder. And there are definitely some exciting industries as well coming to kind of, to the table here.
Fantastic. Well, Kurt said, thank you for the flag side chat. I have 17 more questions, but I'm not going to ask those right now. Instead, what we're going to do is break into breakout rooms. So I'm going to verbally say the 2 questions I want the breakout rooms and your groups of 4 to chat over, just some light guidance for the discussion so that you're not awkwardly placed in a room and say hi. For 5 minutes, I'd love, especially if you are a startup with a company, take a 60-second, get the timer out, 60 seconds, treat this seriously, give your elevator pitch. What problem, back to problem, right? Problem focus. What problem are you solving, for whom, and how do you make money? What problem are you solving and for whom, and how are you making money? If you do not have a startup, maybe spend 60 seconds talking about a problem area you are excited about addressing or are working on through your organization or what have you. So to kind of abstract that to the level of general problems you are solving in whatever capacity you're acting. So that's 5 minutes, okay, of a 15-minute breakout room. The next 10 minutes after everybody's gone around the room and shared their elevator pitch, I'd love you to spend 10 minutes. So más o menos 2.5 minutes per person. Say, reflect on this flag side chat, the fireside chat. What's one thing you heard or learned for the first time or that got you thinking or wondering? So pretty broad, but what is one of your reflections from that you heard from this flag side chat? Maybe apply it to your company, something you're grappling with as your company or your organization, and kind of just take 2.5 minutes to actively talk to your other 3. The other 3, actively listen. Don't butt in. Don't say, yes, I've been thinking about it, and go off and steal it. Wait for your 2.5 minutes to just practice some active listening. Some of you are smiling because I do that sometimes. Okay, so that's the gist to get you flowing and going. It's going to be fantastic. You're going to meet somebody new, I hope. Dan, explain the logistics a little bit for this magic.
Yeah, sure. Thanks, TJ. So the breakout rooms, again, you're going to be in groups. Focus, the first 5 minutes on question 1. Second part of it is kind of then spend 10 minutes on those questions. I encourage you to copy and paste those if you can, because once you go into the breakout room, sometimes it's easy to lose track of those questions because it is a new instance of Zoom. So you should have full capacity to share your screen and talk. But if anything goes wrong and you just need to come back to the main thread, this main room, there's a little button where it normally would say close session. Now it will say end room or leave room or go back to the main room. And that's what you want to push. That's if you have any issues. Otherwise, once the 15 minutes are up, I'll put a counter on and we'll close the rooms and come back to the main thread to do Q&A and wrap up. There will be a button that says please join. So I'm going to go ahead and hit that button to open up the rooms, and then you will click the button to join your room. Okay. TJ, any last thoughts before we get going?
No, let's go have good discussions for 15 minutes.
Okay. I'll see you in a little bit. One.
Welcome back from breakout rooms, everybody. Really, rather than, I perceive there's going to be lots of questions for these fine 2 individuals from Kickstart. I want to get right to it instead of debriefing or asking anybody to debrief on their breakout room conversation. But I will just say, if you made a good connection in the breakout room, before we leave this digital domain, go to your chat, select the person with whom you think maybe we should talk further. We should grab virtual coffee. We should exchange email addresses. We should connect on LinkedIn. If you haven't already found them on LinkedIn, just make that connection and find some way to further the discussion with that person before the meeting ends. All right, so now it's all you guys, guys and gals. If you have a question for Kickstart, please put it in the chat, text it in the chat. And yeah, this session will be recorded as well. If they said something previously you just want to hear again. But I know that in my breakout room, there's more questions about reserve and like how their fund works. So if there's questions around that, I know they'd be happy to answer them. will you fund me questions, maybe not the right time or place to ask those, but certainly if there's a general way to ask, like, hey, do you look at companies that do X? You know, that's a great line of questions. All right. Dan actually has a question. So
Technically, they were ones that were earlier in the session. So those are
okay.
people that were earlier.
Great, thank you. Let me just read this so I can put it in the good question form. What's the average industry you invest in? What connections or expertise do you have to add to an industry? So that's actually a great question in terms of, you didn't have a chance to talk about it, Kurt and Sid. What's the value add that you offer beyond the check? And what industries do you think you're particularly strong in adding that value?
I'll jump in quickly since we have Kurt on the call specifically. Kurt is our consumer guy. He's our consumer expert and adds a phenomenal amount of value that I've seen multiple times with various investors, with various entrepreneurs on consumer businesses and products. Kurt has a very impressive background, previously senior vice president over strategy at Nike, and also has experience in the healthcare space. And so because Kurt's on the call, I'm putting him on the spot and talking him up. But I love introducing founders to Kurt specifically for those reasons.
Well, gosh.
Now, Kurt, you can do the same for Sid.
I'm
awesome.
I'm totally watching. You know, so yeah, I think when you think about, and I assume the spirit of the question is, again, what the company should expect from Kickstart in terms of value add beyond the check. Was that the spirit of the question, or is it more what we're expecting to see from the company and its connections to an industry?
Former, and I think it's probably the spirit of the question is, are you right for what I'm working on? Give me a little bit more context on, you say B2B SaaS, but is that B2B SaaS in specific industries, or are you really all over the place and it's more tech driven? Like, a little more context, I think, into what are those areas of strength that you're therefore more comfortable seeing deal in?
Yeah, so I would say what you would see if you looked at a broad cross-section of the Kickstart portfolio is you would see probably 60% of all the investments we've ever made are in business-to-business software as a service companies. Those will break into different areas of industry focus. We have a number in marketing technology. We have a couple in education technology. We have a number in health technology. And so to a degree, whether we have an individual on the team that necessarily started his or her career in one of those sectors, the fact that we now have, you know, over a decade of experience collectively as a team backing multiple companies in those sectors, there's pattern recognition. You'll learn a ton, right? So I think that would be one way to sort of answer it. When there is operating background on the team, so, you know, Sid embarrassed me, but when there's operating background on the team that's directly connected to an industry, that clearly helps. I would say, though, if you're thinking of approaching Kickstart to pitch and the company is generally meets the criteria that investors find interesting, it's a scalable opportunity addressing a big market, founder opportunity fits good, the solution is 10x better than anything else currently available, you know, all that stuff, right? Some level of capital efficiency. You know, if we don't think we're the right fund to do it, we'll tell you that, right? Mm-hmm. And we'll tell you that even if we otherwise would find it to be an attractive opportunity. So, you know, we love certainly to be in circumstances where the value add that we can provide to the company goes far beyond the check. If we are really not in a good position to be that value add, we'll be honest about it. I'm working with an entrepreneur right now out of Denver that's pitching us, where she has a great idea. I love what she's going after. I think it's very possible we're going to end up funding this company, but I was honest with her right out of the gates. I just said, look, trust me, the space you are going for, I don't know anything about. And so I am happy to go through the effort of learning this business and working to provide value, but I don't want your expectations. I'm not going to pretend to be something we're not.
Yeah.
In terms
That's
of
important.
that. And I think that's the best we can do, right? Is just to be really honest as to where we have that capacity and capability and where we don't. And then the entrepreneur can be the judge about whether we're the right source of money or not.
Yeah, it is a partnership. Go ahead.
I was just gonna say, the thing I would add is totally echo everything Kurt said. And I think also one thing that I personally love, and before joining Kickstart was always really admired about Kickstart, is the community that we've built within our own portfolio. And we dedicate a significant amount of time and resources to fostering that community through what we call Kickstart Collective. And we've got a member of our team named Karen Zelnick, who is dedicated full-time to really rolling out this effort. And in a non-COVID environment, we're hosting annual executive and CEO summits to really create a way to enable these founders to get to know one another, share best practices, share guidance. We've got companies from all stages at this point in the portfolio, from pre-seed, just beginning phases, to growth and really breakout growth and approaching exit. And so I think it's a really valuable way, a way that we love to add value is really just fostering community. And we've got entrepreneurs of all walks of life who are able to support one another and rally together.
Yeah, Sid, I'm glad you said that. I will reinforce what you're saying briefly, and then we can move on to a different topic.
Yep.
Even with, a fund with experienced people and investors on the team, the half-life of expertise in today's world is shockingly short, right?
Yeah.
Businesses develop, models develop, advantages or disadvantages in companies and their positioning can be developing in very, very short periods of time. And so one of the things we've decided is a place where we can add significant value with over 100 companies funded is just to say, look, let's make it super easy for you guys to learn from each other. Yeah. Because we don't fund competitive companies. So we won't have two companies in the Kickstart portfolio that are trying to do the same thing. So it's a safe environment to go in with your peers. And let's say we've got a company trying to, 5 companies, 6 companies in that portfolio that are trying to figure out how to do a better job of content marketing. I can guarantee you there will be 2 or 3 companies in the portfolio that are world-class at content marketing. So all we have to do is make sure those 2 or 3 are teaching the 5 or 6 that are trying to learn exactly that. As a result, we don't have to be the experts on everything. And we found that
companies towards more facilitation of that now.
And we can bring expert resources in too. We've had some amazing speakers that we've been able to arrange from around the world come in and talk to our companies. So it's just nice to be in a position to have the scale to be able to organize those conversations in a way that people who are going through a similar experience can help each other navigate it.
Let's move from that kind of qualitative side of this portfolio coin to a quantitative one. How many exits? Obviously, you don't get to fund 5 without success in funds 1 through 4.
Yeah.
What does that success look like in terms of number of exits, and maybe share one exit that's been particularly good?
I think, Sydney, you may need to correct my numbers on this. I think the total number of exits is 12. Our biggest exit so far was a partial liquidation on Podium. So Podium's $1 billion+ company in Utah that was first funded in late 2014. So it has grown incredibly quickly. At the last round that Podium raised money, there was an opportunity to take a little bit of money off the table, and we did that. We still let a lot of our investment ride because the company is still growing and very, very successful. So that's been the single most successful one. Number of other exits that have been in kind of the 3x to 5x range. We've had some write-offs, right? Companies that didn't make it at all. That goes with the territory when you fund as early as we do. Definitely the biggest exits we're looking at are ones that haven't yet quite happened. Lucid Software, probably the standout case here, where we still own a surprisingly large percent of that company, given how mature it is and how far it's developed. Lucid will be, we're quite confident it will be one of the 5 or 6 largest exits in Utah history by the time the company actually chooses to either sell or go public. And they continue to perform like crazy. COVID hasn't slowed them down one bit.
Yeah.
So, you know, we're just hanging on and cheering that team on. Gavin Christensen is still on that board. That will be, I think, from what we can certainly currently have visibility to, will be our largest exit ever.
Very cool. Another team question, getting back to this problem solution fit. You've got a founder with great problem solution fit, but David King asked a really good question. He's one of our mentors for Activate and mentor everywhere pretty much in New Mexico. And we love him for it, appreciate it. What do you do if a founder has that deep experience in a domain and passion to solve a problem, aptitude for rapid learning, et cetera, but doesn't have the skill set to be the CEO? Do you say no? Like, have you funded companies like that and then worked after the check to get them the CEO? Do you tell them you should go talk to these few people and then come back to us? How do you typically handle that situation?
Why don't you start on that one, Sid, and then I can actually give a couple of examples also to add to your response.
Okay. I think so yeah, I would love to hear your thoughts on this too, Kurt. I think very kind of sort of candidly, I think we care so much about the team. Like we're really investing in the team at the end of the day. And so I would say, you know, to the extent that there's a company presented where the problem is clearly deep, I feel like there's exceptions where it makes sense to try and, you know, figure out a way to it could make sense to try and structure a team in a certain way to create a scenario where it makes sense to invest in the company. And I think at the end of the day, our model and focus is really to invest in founders who are able to create that team. And so it doesn't necessarily mean that the founder has to be the CEO. I think if the founder has an idea that they're bringing to the table, they have the skills to really, a really strong skill set to execute on that idea. I think that part of the key is for that founder to be able to then also bring the right people to the bus, right? I mean, get the right people on the right seats of the bus. And so to the extent that that's the case, I think that it doesn't, you know, preclude an investment. I just think that it's critical that the right team is in place when we invest.
Yeah, I would say every founding team, by the time they pitch Kickstart, needs to have 2 positions filled without exception at an executive level. One person that knows how to build the product and one person knows how to sell the product.
Yep.
And we don't really care which one of those 2 is the CEO, honestly. It can be the technical person, it can be the salesperson, it doesn't matter. But those 2 are must-haves. And so we have had situations, I can think of one from about a year and a half ago, where a company came in and pitched us. They had spun out of technology from a larger, very successful corporation that company didn't want to pursue anymore. Team went off, took the tech, built a company around it. They were generating meaningful amounts of revenue. It became clear in the course of the pitch and getting to know the team that nobody that was on that team at that point in time was really functionally at the level of a CEO. And so we gave them that feedback and they went off and found a CEO. And so to their credit, they agreed with us and they were willing to make the decision, you know, to whatever personal sacrifice it meant for them and their ownership and perhaps egos to some degree, to bring somebody in who would make the company more fundable. And we funded it, right? And that CEO is a fantastic CEO. But I think to Sid's point, we would never fund a startup without a CEO we believe in. that person does have to be there. Doesn't matter whether that person is technical or more of a sales or market development oriented person, but the CEO's got to be somebody we really want to back.
Cool. There might be some follow-up questions for that. That's fantastic answers. Let's see here. I'm going to get to Chap's question next, and this is like a how do we reach you kind of question, but what is the best process by which to apply to Kickstart or let Kickstart know about my company for consideration at this point?
Yeah, we have, so our website, and I think that Dan posted a link to our portfolio, which is our website in the chat room. So it's kickstartfund.com. And if you go to our contact page, we have a contact form. It takes like 3 seconds to fill out, and then you'll receive a second form that is our pitch form, which should take 10 minutes or so to just kind of give us a little more insight into what you're working on. And so that's probably the best way broadly to contact us. And then we review each of those forms. And if we feel like there's a potential fit, we'll reach out to you directly for a follow-up meeting. And that's kind of in the beginning phases, those are the steps that you can expect from us. And then I would just say broadly, you know, if there is a fit and we speak and it feels like it makes sense to kind of engage with the broader team, our process, and this is a question we get a lot, is our process is just meeting with the team and then potentially moving into a diligence phase where we will dig in a little bit more in depth, ask the important questions to understand whether we want to make an investment. And that process from a timeline standpoint can last weeks or months, kind of depending on where you're at in your process and the information that we're able to receive and the speed at which we're able to receive that. So that's just kind of the process from it kind of reaching us and then also to investment.
Great. Mosabi, I hope I'm pronouncing your name right. It's a great, Mosabi team. I think that's a company. Anyway, remote teams, virtual teams, and back on team, right? This is still in the domain of team related questions. Is there a set policy of behavior, comfort level, having a team close, having a team in a specific place? Is there a philosophy around that, especially in light of coronavirus, or is that really a non-consideration for y'all?
I would say we are getting more open-minded about remote teams. We, for a long time, I think, had a very, very strong predisposition toward wanting teams to be executive teams, particularly founding executive teams, to be co-located. There are so many decisions that get done in real time, where quick, efficient conversations, relationship building, going through a lot of difficult experiences together, where physical proximity actually makes a material difference in how well that tends to develop. And so that's been a strong predisposition of ours historically. I would say still, situations where the executive team at least is in close proximity to one another, and when you're able to work in the same building and room and that sort of stuff, again, that we see that as actually being a material advantage to the efficiency of a startup team. That said, I think these days you have to be more open-minded, and we are seeing teams make it work. One of the best companies in Utah, a company called Degreed. Degreed was 100% virtual from the very first day they started. And I think the odds are against that. It makes it harder to make that work. It doesn't mean it's not possible. It just does make it a little trickier. And so that is something we're going to want to know about, and we'll take it into account as we look at the opportunity. It's not a knockout factor. It sort of used to be. It's not anymore. But you should know we do have a general preference for kind of minimum friction in environments where teams can sort of work together and speak with each other and be really efficient in those interactions. And that's always a bit of an advantage, we think.
Great. Kind of a follow-up to that, and another way of asking what Marco put in here is, am I correct in thinking, because this is kind of the way we think about it, it's not like you all have a checklist and all the things need to be checked off. It's more like a continuum of considerations for what makes for a good investment. And if there's some weak spots, they're counteracted generally if you make an investment by so much strength in these other spots. Is that fair? For example, Marco's question about solopreneur, and back to the there's not a CEO, but what if you do have a CEO and it is just one person? Will you still not invest in that? Or you could, or you have, but it was because all these other things look just so fantastic.
I can comment on that, and then please chime in, Sid. I saw an opportunity recently. It was a consumer product company. The founder of the company was a prolific inventor, is a prolific inventor, had come up with a very, very interesting technology that was fully developed, productized, had production volumes out of a factory, and was already doing some sales on that product. The challenge with it is that, as I was talking through with this founder, he didn't really have any plan for additions to the team. His notion actually was to keep virtually everything else outsourced. And that just didn't strike me as a long-term winning formula. Basically, when you do that, you've got a single point of failure. It's one person. If he gets sick and he gets COVID and is hospitalized for a month, there's no company, right? Mm-hmm. And so I think the challenge with a solopreneur is it creates a single point of risk. There isn't diversification on the team, and the person isn't necessarily complementing his or her strengths and weaknesses with strengths of somebody else. So teams strongly favored. I can't think of a circumstance of a company we funded where it was just a solo individual, where there wasn't at least one other member of a team with a complementary set of skills and responsibilities. Mm-hmm. Am I missing any that you can think of, Sid?
No, I can't think of any either. I mean, I think like it's sort of a different scenario if the prospective team members are clearly lined up. I mean, at the pre-seed stage, they're like, that is the earliest stage. And so I think particularly if you're pre-seed and you're raising capital from angels, that's a scenario where, you're proving out, you're scrappy, you're agile, you're in the very early phases. And so that makes a little more sense. But I think at the pre-seed, I would echo everything that Kurt said. I think it's critical that there are, that the teams built out are at least very close to being clearly kind of defined.
Mm-hmm. Very cool. I think, that's good. That's good. It's nuance, more nuance than I think we all want. If there were a magical formula by which we could totally quantify decision-making, none of us would have jobs in the venture capital world.
You just have an index fund, and the rest of us could just sit back and watch.
Right.
Yeah. But for the moment, we have roles to play. We're happy to be talking to you two specifically around that. Let me see. I think there was another question, but I'm not sure. And no more questions and no more time. So I have one big ask of everybody on the call. It's the only thing I ask in exchange for the value that I hope what we have created through discussion is that you click on the link that Dan will be reposting here and just has for the survey. We want to be in our learning organization. We want to measure the impact we do or don't have. We want to understand specifically in series like this, what is the most value for our community and what is the least value, so we can do more of the former and less of the latter. So if it was great, if it was terrible, if you're highly confused right now, whoever you are, please right now click on tinyurl.com/hash, and it only takes a couple minutes. Give us that feedback. Thank you. I will wait while you do that. Okay, last but not least, just one more little bit of networking here.
TJ, let's first give a hand. So if you want to unmute and clap or send emojis or jazz hands, I know it's busy people, and I know it's hard to have that social interaction. So I wanted to make sure that we praised you for coming out and talking with some of these New Mexican startups and businesses. So thank you so much, TJ.
Good stuff. All right, in the this is kind of like the credits. We love to do this as well as one little thing to do. We got a wonderful amount of people, some of whom I do not know. I've never met some of you. So in the everyone chat, be succinct. Don't write me a paragraph and drown everybody else out. That's not cool. But one to 3 lines. Who's your company? What's your organization? What are you asking for this community? Hey, check out our landing page. We're looking for a CEO so that Kickstart will fund us. You know, anything that might be a tangible ask of the community on the call right now. Educate us. So there's an example from Dan. He's looking to connect with New Mexico startups that want to be part of an active community of founders and mentors. So boom, get in touch with Dan. Contact information, include your email. So let's do that, and I'll start reading them off as I see them. And again, yeah, thanks so much, Sid and Kurt, for taking the time with us. We will have to make this a regular thing as you all have been active in New Mexico. By the way, while I'm waiting, I believe it's 4 companies from New Mexico that are part of that portfolio, if
That's
I'm not
correct.
mistaken.
That's correct. It's at least 4.
Yeah.
Yeah, that's right.
Fantastic. Love to have. I think Kickstart has been at every pitch event we've held here, which is fantastic, and super great relationship. So, Chap Grubb at Rerouted.co, a marketplace looking for potential co-founders who want to join Rerouted. Chap at Rerouted.co. They're in our Activate New Mexico program, and fantastic. Thank you, Chap. Come on, folks, type faster. Oh, here we go. Connor, Contra Technologies, looking for active seed investors in New Mexico. You are one I do know, Connor, so wonderful. I keep on thinking my Super Nintendo video game, Contra, way back in the day. Actually, it's not Super Nintendo, that was just Nintendo. Ooh, anybody?
You're
Contra?
dating yourself.
Yes, I am. So Jennifer, Commencement Pictures, a new production company started out of UNM Film to support our students and the New Mexico film industry. That I have not heard of yet, and I'm really excited about that. Awesome, Jennifer. If you have contact info, Jennifer, pop that in too. You can, I don't know if you can edit past things, but you can just put in your email if somebody wants to contact you, or LinkedIn. David King, once again, prolific participant today. David, looking for the next great startup to join. Meanwhile, sharing my 20+ years of startup experience in Austin and helping New Mexico companies prep for financing with financial modeling and other advice. Kudos to David. He gave an amazing session to our Activate New Mexico cohort, and provided just free out of the goodness of his heart and expertise, one of the best financial modeling spreadsheets I've ever seen. So, and actually Kickstart, you might want to connect with David to see the way in which he's created that. That's quite different than some other models I've seen. Cool. Kanani with Fruit Stand. Hey, Kanani, we bring a new model to building websites. Kanani at fruitstand.tech. Wonderful. Jennifer, thank you for your email address. If you're interested in getting involved in production here in New Mexico, definitely contact her. Rosalie Multari, Photon Metalytics, developing a laser-based method of blood analysis, which, if successful, will change the world. All right, I love that. We are in development and looking for investment funding to build a prototype, very early stage for a product. Great. Definitely reach out to me, Rosalie. We'd love to connect and learn more and connect you as I can. Let's see. STEM Boomerang. Thank you for that reminder, Paul. To STEM Boomerang, anybody looking for talent? STEM Boomerang initiative started out of UNM, brings people with a connection to New Mexico back to New Mexico. We're talking graduates of the top colleges, universities, for especially STEM-oriented opportunities. So that's, if you're looking for that CEO or CFO or technologist, that might be great. Kin, Jomo Health, and we're over time, so if you have to leave, do, but this is fun. I'm gonna keep going until I read everybody. SaaS provider of compliance logistics for the home healthcare industry that increases patient trust, clinician safety, and preserves revenue. Jomo.health. Awesome, Ken. Chris, originally from Minnesota, moved to New Mexico and Deloitte Consulting some years ago, started Mosabi recently. FinTech focused on financial inclusion and mobile financial education for emerging market entrepreneurs and SMEs. That sounds really intriguing. Learner profiles, you could read the rest of that. Starting in Mexico and India, really cool. I'm gonna check you out. I think that's Chris at mosabi.co. Just add that A back in if you wanna learn more about that. Adam, preliminary studies with UNMH for building, creating Mandarin system for employees and visitors, but looking for tech and software funding. Thank you.
Navigating with them, sorry.
Navigate, okay, great. Richard, farmer, is looking for an AR wizard based in New Mexico, also a co-founder. Richard, contact me, tj@abqid.com. I have somebody that I can connect you to who's been swimming in the AR waters for a while now. Leon, informal scout for artificial intelligence, machine learning, hardware, software app for Micron Venture VC. Life science for Teal Capital. Also interested to connect with any pre-seed seed startups for Park City Angels. Very well connected there. Thank you, Leon. Marco Schmidt in BizWorks, a virtual business incubator marketplace seeking a co-founder, connections with incubators and economic development orgs. So Marco's also in our Activate New Mexico program. Fantastic, Marco. Sydney, so great to be here. Oh, that she's just saying gotta go. She probably left already because I'm looking down here.
She did.
All right. All right. Hey, I think we did it. Last but not least, going once, going twice. All right, make a connection with one of those folks. I'm gonna grab one of these. I know I want to make that connection. All right. Thanks everybody for staying engaged. Thank you so much, Kurt, for your time.
Happy to do it.
We'll be in touch, and we'll see you next Friday, everybody.
Cool.
Thank you.
Thanks.
Stay safe, everyone. Goodbye.
Thank you.